Welcome back. Today, I'm not going to be wasting any time. I'm going to be showing you a strategy for your bias, which has an 86 to 94% win rate. And then I'm going to show you how to actually execute on that bias. So let's get right into it. Now, the way that we're actually going to get that high probability bias is by taking advantage of something called weekly cycles. If you don't know what they are, they're frameworks which are going to tell you how the week has a high probability of forming. Now, more specifically, we're going to be talking about the classic expansion week. There are two variants of this, and I'm going to show you what they are now. So in a classic expansion week, we're essentially looking for either Monday or Tuesday to form the high or the low of the week, depending on whether you're bullish or you're bearish. So let's start with the Monday high slash low of week variant. So when it comes to how the weekly candle forms, usually the week is going to open up and move away from your higher time frame draw before going towards your target, right? So let's say you have a overall bearish bias for the week. You're expecting a bearish weekly candle. You're going to anticipate that week to open up and move higher before dropping to the downside. Now, the same goes if you're bullish. Let's say you're expecting a bullish weekly candle. You're going to expect price to move lower before running to the upside towards whatever target you have. And with this first variant of the classic expansion week, you're expecting price to form the high on Monday, right? Obviously, if you're bullish, you're expecting the low to get formed on Monday. And then from there, you have a very high probability of price expanding through Monday, Tuesday, Wednesday, and Thursday. Okay, so once you see that high has been formed, you're going to be able to anticipate lower prices on Tuesday and then on Wednesday as well. And then the last really high probability day is Thursday. And then often you'll see Friday actually gives a bit of a retracement, right? The same if we go ahead and look at a bullish example, right? Monday will form the low, and then you'll have, that's the wrong way around. You'll then have Tuesday, Wednesday, and Thursday as high probability expansion days, and then Friday will usually retrace. And then when it comes to the other variant of the classic expansion week, it's the same thing, but instead of the high or low forming on Monday, it gets formed on Tuesday, right? So the same thing, the week opens up and moves lower, forming a low now on Tuesday. And then from there, you have Wednesday and Thursday as high probability expansion weeks. It's the same story with Friday. Friday will usually give a little bit of a retracement. The same for if you're bearish. Tuesday will form the high, and then we'll have Wednesday and Thursday as high probability expansion days, and then Friday will often give a little bit of a retracement. So where did I actually get the 86 to 94% win rate stat from? Well, I personally went through multiple years of data looking for these classic expansion weekly cycles, and I found that the Monday high slash low of week has an 86% chance of the high forming on Thursday, and the Tuesday high or low of week has a 94% chance of the high slash low forming on Thursday. So knowing these numbers, once we see Monday or Tuesday form the high or low of the week, we know that we have an 86 or 94% chance that the week is now going to expand until Thursday forms the high. So maybe now you're wondering, how do I actually go and apply these to the charts? So I'm going to explain that to you now. So here's what you're going to do. The first step is figuring out whether you're expecting a bullish or bearish weekly candle. Now you can do this using external to internal range liquidity and institutional order flow. I've made plenty of videos where I talk about it more in depth that you can go and check out. But that's the first step. Figure out which direction you're expecting the candle to go in. Now, if you're expecting a bearish weekly candle, we know price is likely to open up and move higher before running to whatever downside target you have. Okay, so what you're going to do is you're going to sit on your hands. You're going to wait for the week to open up and run higher into some kind of higher time frame PD array. It doesn't matter what it is. Could be an FVG, could be an order block, could be a breaker block. It doesn't really matter. You're just looking for the week to open up and run higher. Once price runs higher and we form that high on either Monday or Tuesday, because both of them count as a classic expansion week, you're going to then wait for a CSD. Okay, so the high is going to get formed on either Monday or Tuesday. And then we're waiting for a CSD on either the 1 hour or the 4 hour. Once you get that CSD and price has formed the high on Monday or Tuesday within a higher time frame PD array, it's a pretty good sign that that's likely to be the high of the week. So that's what we're going to look for, right? A 1 hour or 4 hour CSD. Once we get this, you can be very confident that price should now expand to the downside towards whatever liquidity target you have until Thursday. Now, these high probabilities of 86 to 94% are only valid until Thursday forms the low. Once it forms the low, you're on your own. I can't help you. You cannot apply these probabilities. But until it forms the low, you very much can. So for a bullish example, it's the same thing. Let's say you have a bullish liquidity target and you're expecting the week to run to the upside. Now, that week is likely to open up and move lower first and then start to run towards your liquidity target. So the same as a bearish week, you're going to wait until price moves lower into some kind of higher time frame PD array. Now, once it does that and the low has formed on Monday or Tuesday, and you see a 1 hour or 4 hour bullish CSD, you can be pretty confident that that is going to hold as the low of the week. And you can now play with those high probabilities until Thursday forms the high of the week. So now by using that, you have an 86 to 94% success rate for your bias. I'm going to show you some examples, then I'll show you how to execute. This first example is a bullish Monday low of week. So if we look at the weekly candle, you can see that we had a nice bullish candle. The higher time frame bias is nice, right? Price rebalanced this internal range liquidity. It makes sense for price to expand to the upside. Then if we look at the daily, you can see this here is Monday, which formed the low. Then we had a Tuesday, Wednesday, and Thursday, all bullish candles, okay? Now, until Thursday formed the high here, so once Thursday took out Wednesday's high and formed the high of the week, you had an 86% chance that price was going to run in your favor. And then if we go into a bit more detail and actually look how Monday's low formed, okay, you can see very clearly that the week opened up back here, okay? The week opened up here. Price moved lower beneath the open and then formed this very, very clean 1 hour CSD. So that's the confirmation you're looking for, right? You're looking for price to run beneath the open and then form a bullish CSD. So once we get that, we can be confident in daily expansions until Thursday forms the high of the week. Now, this is a bearish example of the Monday high of week. It's this bearish candle here. And if we go on to the daily, you can see very, very clearly that Monday is this candle. So Monday formed the high, and then Tuesday, Wednesday, and Thursday all expanded to the downside. So again, you have a 86% chance that price is going to run in your favor until Thursday forms the low of the week, right? So until this Thursday candle took out Wednesday's low. And then if we look at how Monday actually formed on the 1 hour, you can see here, this is the open of the week, right? We had a run above the open, followed by a displacement lower, forming a 1 hour CSD. Okay, so again, once you get that, you can be very confident that price is now going to follow your bearish weekly expansion, and you have a high probability of it expanding until Thursday forms the low. So now we're looking at the Tuesday variant. This one is a bullish example of the Tuesday low of week classic expansion. So this here is the bullish candle, right? You can see it was bullish. So here on the daily, you can see that Tuesday formed the low, then Wednesday expanded, and so did Thursday. Now with these Tuesday variants, there's a 94% chance price will run until Thursday forms the high of the week. So these probabilities stand until Thursday took out Wednesday's high, right? And you can actually see this is a good example because Thursday took out Wednesday's high and then rejected, and then Friday didn't even expand again, right? So that's a perfect example of those probabilities playing out. And then on the intraday time frames, you can see this here is Tuesday's low, and it was followed by a nice bullish displacement, which actually formed this 4 hour CSD. So once you get that CSD and Tuesday's form the low, tag in some kind of higher time frame array. So here there was a bullish daily FVG, for instance. Now you can be confident that price is going to expand until Thursday forms the high of the week. So one more example before I show you how I would personally execute on these expansions. We're looking at a bearish example of the Tuesday high of week. So here is the candle. This is a nice bearish weekly candle. You can even see here that the candle tagged this weekly FVG. And then if we go on to the daily, you can see that Tuesday formed the high, Wednesday expanded after that, and then we had a push down on Thursday to take out Wednesday's low. Obviously, you can see here on Friday, we also had a big expansion. But that success rate of 94% only holds until Thursday has taken out Wednesday's low or until it's formed the low of the week. Now you can see that after that, Friday pushed aggressively to the downside as well. But that 94% success rate applies until Thursday forms the low. I'm not saying it's impossible for Friday to expand after that, but you won't have that really, really high 94% win rate on your side if you're playing that. Then again, what are we doing on the intraday? Well, we're waiting for price to firstly move above the week's open. So where did the week actually open? All the way back here, right? Somewhere around here. The week's opened, price has moved well above that. And then we get this 4-hour CSD that forms once price tagged this weekly FVG that I highlighted. Once you get that, again, you can be very confident that price is now going to expand in your favor to the downside until Thursday forms the low of the week. So once that weekly cycle has set up and you have the high probability bias, how do you actually execute on that? Now, me personally, I use something called daily cycles. Now, they're extremely powerful frameworks which tell me where the following session is likely to go with very high probability. There are 3 that I'm going to be showing you in this video. So in these examples, it's going to be bullish. Just flip it round if you want the bearish examples. The first one is called London protraction, where Asia kill zone consolidates and then London kill zone sweeps out Asia's low before running to the upside. Okay, that's the basis of it. So you want to add Asia kill zone and London kill zone to your chart. Once you're anticipating that bullish day, you're going to look for the day to form like this, right? You're going to sit on your hands and wait for Asia session to pass. Once Asia session builds up some liquidity, you're going to wait for London kill zone to sweep that out. And then once price is down here, you're going to look for your entry and you're going to hold that trade for London session or until your liquidity target is reached. The next one is called New York continuation. This one involves London kill zone and New York kill zone. So you're going to have to add Asia, London and New York to your charts. And this one essentially is where London will expand towards your liquidity target, but it won't quite reach it. And then in between London kill zone and New York kill zone, price will retrace. And then you'll get a low formed within New York kill zone. That is where you get your entry. And then you will hold the trade until the end of New York kill zone or until price reaches your liquidity target. Now, the cool thing about a New York continuation is you can actually play this after this London protraction. So see here how we get an impulse in London. That impulse in London could be this part of the New York continuation, right? So you could catch one after the other if price sets up really, really clean. So again, what you're going to do, you're going to be expecting a bullish day using that bias that you set up. And then maybe either London doesn't give you a trade or you miss it or you don't trade London. Whatever the case is, you're going to wait for London to expand towards your target. Once it does, you wait for the retracement and you catch your entry after the retracement in New York kill zone. And then you look for your trade to target that liquidity. Now, the next one is called New York reversal. This one involves London and New York kill zone again. So instead of how the continuation forms, where London impulses, New York continues that impulse, instead, London's going to do whatever. Maybe it moves a bit, maybe it goes completely sideways. It doesn't really matter because what we're expecting this time is for New York kill zone to open up and actually take out London's low. Once you see New York kill zone take out London's low, you want to go ahead and try and get a lower time frame entry within here. And again, hold your trade till the end of New York session or until your liquidity target is reached. So the basis of this, essentially, if you're bullish, you're going to be expecting the daily candle to form like this, right? I don't know what color your charts are. I don't really care. Let's say that they're this color green, almost like mine. Let's say you're expecting a bullish daily candle. You're going to look at the kill zones and look for one of these 3 cycles to form. And you're going to get your entry once they complete the criteria, right? So for these two, you're going to wait for a sweep of session liquidity. For this one, you're going to wait for a retracement back into London session. Now, I personally have 8 of these daily cycles that I use. I'm just giving you 3 in this video because I think it'd be a bit overwhelming and a bit long-winded if I was to give you all 8 of them in one video. But if you do want to learn the other 5 daily cycles, I have something called the Daily Cycles program, and you can actually activate your free trial for 7 days today. And it also comes with 6 in-depth technical courses. So you basically have everything that you could need if you want to go ahead and replicate my personal trading process. Now, the link to activate your trial is going to be the first one in the description. Now, let's get into some examples. So this first example is on the 10th of October 2024. You may remember the week from when we just went over the weekly cycles. You can see here that Tuesday formed the low of the week. So we have a 94% chance that Thursday is going to form the high. So this trade is actually on Thursday, right? You can see here the 10th is on Thursday. So our draw for this day is to target Wednesday's high. Because once Wednesday's high is taken, that 94% success rate can't be applied. Okay, so that is our target, Wednesday's high. Then if we go onto the intraday, we're going to be looking for one of those daily cycles I just showed you. So if we let Asia kill zone play out first, because we don't ever trade that, we just want to see if it builds up liquidity for London kill zone to take. Okay, so you can see here we have this 1 hour FVG, and Asia session has actually built up equal lows within that FVG. If I zoom in a bit, you can see we have equal lows down here. So essentially, Asia has built up liquidity, which is setting up pretty nicely for that London protraction cycle. So we want to see London kill zone run Asia's low, then we'll navigate an entry in here, and then we'll expect price to run to our draw, which is Wednesday's high, right? That's essentially what we're looking for. So if I play this out on the 15-minute a little bit, you can see this purple box, just like the drawings I showed you, is London kill zone. And you can see that price takes out Asia's low, right? So once price has taken out Asia's low, we know that we're setting up that London protraction cycle. We have the high probability draw. We can go ahead and get an entry. All I'm really looking for is a change in state of delivery. So a switch in order flow. So potentially price will form some kind of order block after being bearish. And then I'll enter off of the order block, maybe a propulsion block, maybe an FVG. I'm pretty flexible with it. And then we expect price to run to that target, right? So if I play this out, you can see that we run to take out Wednesday's high. Thursday formed the high of the week. That is the draw for the week complete. Let's look at another example. In this one, I'll actually show you the entry. So it's within this big bullish candle here. And if we go onto the daily and actually look at how the week played out, you can see this here is Tuesday. This here is Monday. So Monday formed the low of the week, which means we have an 86% chance that price is going to form the high of the week on Thursday, okay, or at least run until Thursday is the high of the week. Now, this particular trade was on the Wednesday, so Wednesday is a high probability expansion day. We can look to buy in London and New York session. So this here is Wednesday, okay. Now you can see Asia session didn't really do much. London session actually took out Asia's low, and it also manipulated some other liquidity. Okay, now following that was a nice bullish expansion to the upside. So if you think about the daily cycles, okay, when it comes to the New York reversal, right, where we get London session and New York manipulates London's low, okay, there's no real reason for that to happen, right? There's no real reason for New York kill zone to take out London's low because London has already manipulated liquidity, right? London has already taken out this low and Asia's low. And we've already got the start of the expansion to the upside towards this external range liquidity. So it only really makes sense if we're playing New York to look for a continuation. So we're going to use that New York continuation cycle, which means we're going to look for some kind of retracement back into the leg, right? So you can see here we had a push to the upside just after London. And then in between sessions and in the start of New York, we got a bit of a retracement, right? This is a textbook setup for a New York continuation. So now the daily cycle is setting up nicely. We're simply going to look for that entry. So like I said before, we're just looking for that change in state, right? That CSD, and then we're going to enter off of some kind of bullish PD array. Okay, so if I play this out a little bit, you can see that on the 5 minute, price takes out this low, and then the following candle expands to the upside, right? Pretty aggressively. And what that actually does is form this 5-minute CSD, right? We form a 5-minute order block, which is the change in state of delivery because price has gone from forming and respecting bearish arrays during the retracement now to forming bullish arrays ready to expand. And we actually close through this 5-minute fair value gap, forming an inverted fair value gap. And if I play out the next candle, we also form a 5-minute FVG. Okay. Now, my personal entry, I might be able to find a screenshot. I might not. This was a little while ago. It was back in August. My personal entry was off of this 5-minute FVG. My stop loss, it was either at this liquidity here or it was somewhere up here. It doesn't really matter. I'm just trying to show you how to navigate the intraday. So we have the daily cycle playing out. We get that shift, right? So we get that entry. And because this is one of the high probability expansion days, we can just hold the trade until the session is over or until price reaches the liquidity, right? So if I play this out, you can see that price runs very aggressively to that external range liquidity. We're going to look at one more example using the New York reversal cycle. But first, I want to let you know that this model is the exact same model I use for every single one of my trades, and it can be broken down into 4 simple steps. I've put those steps into a PDF that is completely free. Okay, it's completely free. It has my entries. It has these daily cycles I'm showing you. It has how I identify my higher time frame bias. It has how I look for liquidity sweeps. It has a link to a flow chart that will actually show you step by step how to identify the daily cycles. It has a link to another free PDF that shows you some tips and tricks for aligning time with price. It has a bunch of stuff and it's all completely free. Okay, and I'm going to put it in the second link in the description. So go and grab that. And now we'll get into that example. All right, so this last example is on EU on the 30th of October 2024. So you can go check out if you want. We're looking at this bullish weekly candle here. If we jump down onto the daily, you'll be able to see that this low of the week here was formed on Tuesday, which means we have a 94% chance that price is going to run at least until Thursday forms the high of the week. Now, this one, like I said, is on the 30th, which is another trade on Wednesday. So this is just a high probability expansion day. We can look to play London and New York session. So now if we look at the intraday, at first glance, you can see that London has already expanded pretty aggressively to the upside. So potentially that would lead you to target some kind of New York continuation daily cycle. But if you look a bit closer, there's not really any manipulation at the start of the day, right? If I put an Asia session as well, you can see that neither of the sessions have manipulated any form of liquidity, okay? Instead, price has actually formed these relative equal lows down here. And those relative equal lows are resting just above or slightly within this 1 hour IFVG, which means if New York session wanted to open up and take out these lows, I'm perfectly happy to play a New York reversal because it makes sense for price to manipulate before running to the upside. All right, so we're going to let this play out until New York session, right? You can see this orange box, that is New York kill zone, and price runs to the downside and actually takes out London's low, and it also takes out these relative equal lows. So now New York has manipulated liquidity, taken out London's low. So this fits that New York reversal cycle to the T. This is really nice. Now we have the manipulation and we have the higher probability bias. The daily cycle aligns. We can go ahead and look for an entry. Now, I'm not going to lie to you and tell you that this lower time frame entry here on the 5 minute is super clean, because it's not, and I probably wouldn't have executed down here, okay? But it's just a very good example of the high probability bias and the daily cycles aligning, okay? So potentially you would have gotten in there if you really wanted to be techie about it. We have a CSD down there. Maybe you get in on this propulsion block, because if I play it out, you can see it does get respected and price does run nicely to the upside. I just personally don't think that that particular entry is very clean. So maybe you would have waited, right? And you can see here we get this closure through the 15-minute bearish FVG. We form an inverted fair value gap, forming and respecting bullish PD arrays. That gets tagged, and then price runs to the upside very nicely. So potentially you would have entered down here. I wouldn't have. And if you do, you know, well done to you. You're fucking crazy. And then on the 15-minute, we get a nice IFVG entry. Now, the point here is that we're looking for a bullish day in line with the 94% win rate bias, right? So if I play this out a little bit, you can see that we do in fact take out this high up here and form a nice bullish day after forming this New York reversal cycle. So that is how you can identify a bias that has an 86 to 94% win rate, and that is how I would execute it on the intraday using daily cycles. I hope you found value in this video, and I will catch you on the next one.